Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is February 9th, 2013, the Chinese lunar calendar New Year. Happy New Year, everyone. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's look at current market trend and our strategy. US stock market is in a strong uptrend. China's stock market is also in an uptrend. My plan is to continue long the market through ETFs and stocks. Let's take a look at all kinds of index chart. First is a US stock market NASDAQ daily chart. NASDAQ is a strong uptrend. After the gap up on the new year, it keep going up. Gold index daily chart is in a downtrend. Right now it's below 50-day moving average. SP 400 mid cap index weekly chart. This is an index formed by 400 stocks. The end of last year, mid cap index broke above the high of the last 2 years, and after it broke out that range, it kept going up. Mid cap index daily chart is in a very strong uptrend. Russell 2000 small cap weekly chart. This is 2000 companies form this index, and it's like a mid cap. It broke out above the high of the last 2 years on December, and it keep going up. Russell 2000 small cap index daily chart is in a very strong uptrend. Silver daily chart, a silver index is in a downtrend. It's making lower highs, and right now it's around 50-day moving average. SP 500 large cap index daily chart is in an uptrend. Shanghai Stock Exchange index daily chart is in a very strong uptrend. US dollar index it's in a downtrend. Right now it's rebounding from here. Crude oil index daily chart. Right now it's in a uptrend. GDX, the gold mining stock index, right now is in a downtrend. IYR is a US real estate ETF. It's in the uptrend. XLE is a energy selector stock index ETF. It's in the uptrend right now. XLF is a financial index ETF. Right now it's in a very strong uptrend. XME is a metals and mining ETF. It's in consolidating. I'd like to share with you some of the stocks that I've been talked about in the past few issues. One is ARM Holdings. It's a high-tech company. They design the chips, the CPU chips that's used in the tablet and smartphone. And they reported earning last week, and the stock went up. This stock is currently in a very strong uptrend. Celgene, U.S. Biotech stock. It's also in a very strong uptrend. It's consolidating around $100 right now. DDD 3 printing is a very strong uptrend, and but recently it pulled back to 50-day moving average and bounced up. So the rebound from a 50-day moving average usually is a buy point. Right now it's extended. NSM is a mortgage company, and it broke out the flat pattern. It's also extended now from that buy point. LinkedIn gapped up after earning. That gap was a buyable gap. And LinkedIn has a very strong fundamental. Let's take a look at the charts. ARM Holdings, very strong uptrend. And this $29 gap up, that's after that was a last quarter's earning report. After the earning report, stock went up, and it never looked back. It just keep on going up. And usually, if the company report a very strong earning report, and if after earning report company gap up, that's a buyable gap, and that's when the institution started buying the stock because of the strong earnings, strong fundamental. Celgene is a biotech stock. It break out around $82.88 and then went all the way to $100 very quickly. Now it's consolidating around $100. This is a range. If it break, it actually did break $100, and that was a buy point. And then they pull back a little bit, but did not break previous low. So $96 should be the stop. Right now, it's consolidating around this range. This is very strong biotech stocks. 3D Systems and DDD, a pull back and touch to a 50-day moving average and rebound very strongly. In the past, every time 3D systems touched the 50-day moving average, that was a buy point. It rebound from there very quickly, and you can make some money if you buy when they rebound from 50-day moving average. LinkedIn it's a social network, professional social network, and they are very strong fundamentally. Their earning growth is a triple digit, and after earning report, LinkedIn gap up. This is a breakaway gap. This is a buyable gap. If you did not have this stock, and this is the point. $140. That's the in that morning when they gap up. That was the point you could either issue new positions or add on to existing positions. This is a very strong stock. NSM, it's a national mortgage, nation star mortgage, and it also gap up with a very strong volume. However, it closed the gap, so it would have triggered a stop if you buy this gap up, and as it closed the gap, it will have triggered a stop order. But now, last week it gave another buy signal. It break above the tight flag pattern. After it closed this gap, it break up above again. So this is a buy point. If you bought, $36 could be the stop order range to protect you from pulling back. That's all for this week. See you.